Well, thank you, Chairman, very much, and thanks for hosting us. What a wonderful opportunity to have a larger discussion on many of the topics that we have been focused on in D.C. for some time. And as most members of Congress, of course, we like to talk about our own districts. So let me talk about the 5th District in Wisconsin quickly, where we do have a bank, the Horicon Bank, that has had employees that have been finalists for the American Bankers Innovators of the Year in 2024. And the reason I bring that up is because what Horicon Bank has been doing is utilizing technology to benefit customer experience with features like opening an account online, as we're all familiar with, interactive teller machines, video and chat services, as well as helping back office functions, fraud prevention, and compliance. Horicon is focused on software as a service solution rather than banking as a service one. So my questions are kind of related to that. Mr. Traeger and Ms. Harbin, have you seen examiners differentiate between institutions that use software as a service and banking as a service? And then what's the biggest obstacle, do you think, in implementing banking as a service solution? So there's kind of the front end for technology and the back end, and I'm wondering if you had any comments on that. Mr. Traeger, you can go first, I guess. Yeah.
So thank you for the question. It's a good question. I'm not sure the exact label of it. You know, the fact of the matter is the regulatory environment is very necessary. I have a high degree of respect and regard for our regulators. Anytime you do anything new or innovative, it is subject to a lot of scrutiny. That waves a flag of risk. Now, we have so much at stake that we understand that risk, and we are very forthcoming with our regulators. Anything new we do, you know, we throw a lot of resources at it. I mean, we've got 35 folks in our compliance department. So we you know, tend to be able to navigate that with some challenge. I think for others, it certainly is even more challenging, and for us, it's, you know, it's always of concern whenever we try to do anything new and innovative. So I would just say that, you know, we ask for some appropriate regulation. You can't regulate around everything, and sometimes it's just up to the execution of the regulators. They have the tools in place, without question, to address the challenges of innovation. I think there's not a congressional response to every incident that happens. So you know, we make it work. I think it's very difficult for a lot of banks to make it work. It's certainly difficult for us to make it work.
Ms. Harbin, you have a comment on that?
Thank you. So we've been with Zest AI since 2021 and had numerous exams, and audits, reviews, and we are met with applaud. They applaud our efforts to go deeper in serve more members. We are serving more people in protected classes. And Zest AI provides us with numerous reports that we share with our board on a quarterly basis. We do an ROI on the service, the cost-benefit analysis. We went through great due diligence with Zest AI when we chose them to be our partner. Have quarterly business reviews with Zest AI where we go over what we're seeing in our loan portfolio, both the loans that are decisioned by Zest and the loans that we've done manually. And we look for ways to increase our usage with Zest. So it might be that they say if you increased or adjusted your DTI or your number of trade lines, you could increase your approvals by 10 basis points, but your risk stays stable and your yield goes up. So those are the type of conversations that we have with Zest, a great partner, and because of that, we have not received anything from our examiners that raise an issue with safety and soundness of our credit union.
Very good. My time has expired. I'll yield back.
The gentleman
Congress to establish an optional and tailored federal charter for payment companies. They're also seeking direct access to the national payment system. This would obviously bypass some of the bank partnerships and allow these companies to avoid the full spectrum of bank regulation. Mr. Bertie, you're familiar with it, and I'm sure maybe you've had some time to kind of consider what the challenges would be. But if some of these bank regulations are unnecessary under such a charter, how would you still be able to scrutinize the safety and soundness of the fintech companies?
Thanks for the question. Look, I think in other parts of the world, so we're regulated, we have 80 licenses across the globe, and in other parts of the globe, we have different bespoke kinds of payments regulation. In the US, it's different, it's more binary, so you can either be a state-regulated, state-chartered payment entity, or with all the limitations that come with that, or you can be a full-fledged bank, and there's not much in between. So I think what we would just encourage in partnership with state regulators and recognizing like the great work of CSBS and the modernization that's happened there, but we should just think about ways to innovate. It works in the rest of the world, and with it comes supervision that's tailored for the level of risk that it presents. There's something between, like I said, the risk of a full-fledged bank offering loans and then payments. And so I don't think we have all the answers, but I think we would encourage the committee, as you have, and others to just take a look at what options are out there.
Mr. DeVere, do you have a quick comment on that one?